It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
One of the unique data aspects that we have at Domain is this search behaviour. So these are really, I describe them as a high-intent searcher where they're coming onto Domain and they're putting in a specific keyword. So they're looking for something very specific. Is words like dual, granny flat, duplex, dual living. These have seen big increases in use across Domain and across our different capital cities.
That is Nicola Powell from Domain on our Thursday morning, and welcome back into the Real Estate Breakfast right around Australia, 7 days a week. Yes, we're talking about your property news, those trends, market fluctuations, and with 1,500 property podcast insights, you too can keep pace of what is happening in your local backyard. Welcome into a Thursday, December the 4th. If you're celebrating your birthday today, many happy returns. You share it with actor Jeff Bridges, who is turning 75, and a couple of historic things that happened on this day. All the way back to 1954, the first Burger King opens in Miami, Florida. Yeah, so many burger joints to choose from these days. Not all healthy options, it has to be said. Some to be avoided. It's always the independent burger operators, though, that I prefer over the big franchises. And on this day back in 1991, Pan Am, once the world's largest airline, officially ceases operations. Are you old enough that you took a flight on Pan Am and ingested some of that secondhand smoke? Now, Domain on this day has got their end-of-year wrap. Now, that is out. It's a look back across our real estate year, and it makes for pretty interesting viewing. So let's go to Sydney and to catch up with Nicola Powell, the Chief of Research and Economics from Domain. Yes, so for somebody who reads a lot of information on the property market each year, this report of yours is very succinct in its bullet points and commentary on all of the capital cities, the graphics and the pacing. Very easy language, so pretty well done. And I think that when people read it, will find it not only full of information, but it's a fun read, Nicola. And whoever said that about a real estate market report?
It's so lovely to hear. And I have to say, it is my favourite report. And it's a really hard report to actually author as well, because you're capturing an awful lot that has happened in the 12-month period and really capturing kind of what's changed the dynamics across our different capital cities. But also it really showcases the rich data that we have at our fingertips at Domain, because we're looking at keywords that buyers are searching for, the highest in demand suburbs. So some really interesting angles throughout the report and across our different capitals.
Certainly is, and you sort of set it up at the start by saying that the year finally brought a sense of relief as rate cuts landed and households began shaking off 2 years of financial pressure. Boy, ain't that the truth. And you talk about confidence crept back as borrowing costs eased and the outlook felt less volatile, but the rebound wasn't felt evenly. Especially many families, as you go on to say, were still adjusting after stretched budgets and higher repayments. So optimism came with a dose of caution. And while confidence returned, you say that affordability barely moved. Prices continued climbing through an 11th straight quarter of growth fueled by population pressures and limited supply. And let's kick off firstly about those prices rising everywhere. By the end of this year, you're saying that 9% growth for houses nationally and 7% for units.
And look, that's really the paradox of 2025. When I was thinking about, what really shaped our housing market this year, but those rate cuts finally came to fruition in 2025. And what we saw is obviously improved borrowing power. When you look at the 3 rate cuts, so 75 basis point in rate reductions, that means your average dual income household had borrowing capacity increased by roughly about $74,000. But this is the paradox of affordability, because we saw borrowing capacities increase by $74,000. But what we're expecting by the end of the year is a 9% increase in house prices, which is a $99,000 increase in house price across the combined capitals. What we have seen is house prices have risen faster than what borrowing capacity is improved by.
Yeah, pretty incredible stuff, really, for 2025. You also have a segment where you're talking about the investors flooding back into the market, competing with, of course, first home buyers, which is very, very frustrating for these first home buyers out there trying to get onto the property ladder.
Absolutely. I mean, when you look at investor lending, we've seen it increase by more than 20% in the first 2 quarters of 2025. And it really did lift their share of overall housing finance to above 40%. And this is the highest activity that we've seen in almost 10 years from investors. Now, investors really do chase capital growth. And I think what we're seeing is previously they were really focused on the West Coast. So we were seeing strong rates of price growth in Perth and even to the extent of Adelaide as well. But I think what we've got now are investors are coming back into our big capital city, and that is Sydney. The chase that's now occurring and even somewhat back into Melbourne as well. And you rightly said, I think the one to watch ongoing really is what's happening in the investor space, but also in the first home buyer space. You know, we've seen the expansion of the home guarantee scheme is now in play, and we know that that is going to bring first home buyers to market. It already is, and will continue to support in that first half of next year. And we've also had the government, they only released last week, the date of the Help to Buy. I think it's early December is when the Help to Buy, so that's that shared equity scheme with government is going to come into place. So I think this is going to be a segment to watch. I mean, we've pretty much seen, even when you look at the affordable sector of our housing market, so that 25th percentile, which is the lower end of our housing market, is outperformed in terms of price growth.
Yes, and just sort of drilling down a little bit more on that affordability aspect for 2025, you look at affordable cities like Brisbane, Adelaide and Perth. They have completely really lost that status as the year went on. That's where they've landed. They're no longer in that affordable category.
I just don't think that we can use that term anymore as our affordable capital cities. I mean, it's very hard to describe an affordable capital when it's got $1 million house price. You know, we've seen rapid price growth in Brisbane, Adelaide and Perth in recent years, and it really has reshaped that affordability map. And we've seen Adelaide join the $1 Million Club. And one of those key shifts this year as well is Brisbane's become the nation's second most expensive capital city to purchase a house and a unit. And Perth is on track. We're expecting Perth to surpass $1 million median house price by Christmas. So, you know, this really does change the landscape. And, you know, I think when we compare it to a market like Sydney, I mean, our expectations are Sydney prices are going to continue to rise and sitting at about 1.8 million by the end of this year. But we are forecasting a 2 million house price in Sydney by 2027. So, you know, these are eye-watering figures, really.
And we are talking to Nicola Powell on our Thursday morning, all about their yearly wrap on the real estate market. We've got more after this.
Listen to expert perspectives with exclusive real estate conversations and supercharge your knowledge base with us.
And right now, let's catch up with Matt Johnson in Cronulla. What's been happening over the last few years? Because Cronulla really has, hasn't it? It's grown quite spectacularly.
Yeah, definitely. Look, I think the Sutherland Shire as a whole was always a little secret gem of Sydney, but as obviously prices have increased in areas like the inner west or eastern suburbs, naturally people have been priced out of those markets and moving further south, and the Sutherland Shire has definitely picked up a lot of those families moving down this way.
Now let's have a look at the median house price. If this is an area that you've got your eye on, let's first run through that median house price for houses.
Yeah, for Cronulla, so currently the median house price is 3.3 million. So if you actually compare that to about 5 years ago, it was sitting roughly 2,200,000.
Eager to expand your property expertise? Enhance your real estate know-how with us. Your real estate journey starts here.
And it's a Real Estate Tuesday. With us is Nicola Powell, the Chief of Research and Economics from Domain. And we're talking all about the yearly wrap on the real estate market for 2025. And hasn't it been a busy one? One of the things that you're reporting on is this word compromise. And for first home buyers especially, they've been compromising probably over the last 3 or 4 years, or maybe even longer for many. But buyers had to compromise in 2025 or they would simply miss out.
It's absolutely the case. And I think when you're a first home buyer, compromise really does shape what you buy, where you buy. And I think particularly in light of prices rising much faster than wages growth. And I think one of the unique data aspects that we have at Domain is this search behaviour. So these are really, I describe them as a high intent searcher where they're coming onto Domain and they're putting in a specific keyword. So they're looking for something very specific. Is words like dual, granny flat, duplex, dual living. These have seen big increases in use across Domain and across our different capital cities. And I think that's really showcasing that Australians are looking for different solutions. That might be multi-generational living, the kids in their 20s staying at home for much longer periods of time, or it's, a growth in home-based businesses, or the ability to have a second income, particularly when you're talking about granny flats rising through the ranks. And I think keywords are really that interesting aspect. When you look at the keywords nationally, pool is number 1, waterfront is number 2, and view is number 3. But what comes in at number 4 and 5 is granny flat and then dual. So it really does showcase the need for more affordable housing options or that multi-generational living, which I think we do. I believe we are seeing a rise in that.
Yeah, for sure. No doubt about it. Those container shipping homes, they are on the rise as a result of exactly what you're talking about. Well, I mentioned that it is the 4th of December. We are running up to Christmas. Everybody's looking forward to the Christmas New Year break, back into it for 2026. If you could name just one thing looking back over 2025, Nicola, what's the thing that maybe above anything else for you that really did stand out this year?
I think it's the concept of the paradox. We have all breathed a sigh of relief. Anybody holding a mortgage breathed a sigh of relief on rates falling, and that we have seen prices rise at a faster rate, particularly more so for house prices. So I think for me, it's the 2025 paradox.
All right. Well, thank you for that update and for that information. This is the end of year wrap that is out today from Domain. Enjoy your run up to the end of the year, Nicola. Have yourself a fantastic Christmas, which is on the way. Look forward to catching you back the other side into 2026.
And you, thanks so much.
Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
And so I wouldn't necessarily say there is going to be a big burst coming anytime soon either. And, frankly, you could have said that it looks like a bubble even 6 months ago. You could have said that 12 months ago as well. So we've been in this situation for a little while.
Now, Australia's housing market, it has this long history, doesn't it, of performing well in unlikely circumstances. Even during the global disruptions, a correction in the AI sector might spook financial markets, but people at the end of the day, they still need somewhere to live, and demand continues to exceed supply.
That's exactly right. Our market is definitely set up a lot better. You've got a strong undercurrent of demand coming through, and you do have a constant supply shortage, which has been a problem as well. So I really don't think that we have the makings of a big crash or anything like that. Even if there is a burst in the AI bubble, it might be a bit of a sentiment dampener, but beyond that, nothing's actually changed in terms of the fundamentals.
We connect you to the best real estate information across Australia. The Real Estate Podcast.